Hello everyone, let's have a look at the market snapshot for today. Starting with the Indian market, the Indian market, the participation has risen significantly. The advances touched almost 400 against the declines of close to 100. That's a good sign for the Indian markets. The leadership, new highs are close to 10 against new lows of 490. For sure, it remains a reason of worry, but then if we compare it to from the last session we just had one new high, so we have got nine more. That's again a progress in the momentum, I would say. The breadth, this has improved significantly, and we just, so if it sustains, that is what would basically enhance the market structure. So if we look at stocks trading above 20 MA, those are close to 200 stocks. Above 50, around 250 odd. Above 200 MA, again around 230, 230, 220. This is again a good sign for the markets. If we look at the trend structure, Nifty 50 remains bearish, trading below 50 MA. The participation is strong here too, which is a good sign. The breadth remains weak. See, the overall structure changes only once participation and breadth becomes consistent. That is what will cause Nifty to rise above 50 MA and sustain. So that is what we are looking at. The good point is, from last 6-7 sessions, if we compare, today is the first time when participation has gone green or has become strong, or else all the three parameters used to remain only red. Coming to Nifty 500, same, it is bearish, trading below 50 MA. The participation has become strong, the breadth has become mixed. Again, two very good sign. The participation becoming strong and breadth improving from weak to mix. So again, I think the market is getting some sort of fuel, so which is good sign for the Indian market. US participation, the advances have declined actually. They are less than 200 at the moment, and declines just over 300. So basically it is little tanking, but we'll see to it. The leadership, again, no, not much changes here too. New highs are not getting formed. The tower for new lows is getting taller day by day, which remains a reason of worry. Breadth, so obviously, the markets have remained trending for very very long, so this breadth will not break in 1 to 3 days sessions, but then it is not showing great strength at the moment. The fall, the stocks trading above 20 MA are close to 250 to 70, above 50 around 250 stocks, above 200 same 270 to 80 odd. So this is what will confirm eventually if US markets are to consolidate, or to fall, or to rise. The trend, obviously all the three major indices, Nasdaq, S&P 500, Russell 2000, all remain bullish because they are still trailing over their 50 MAs. But what things have changed significantly are in the participation and the breadth. The participation for Nasdaq has become neutral, the breadth has become weak. So you can expect maybe a few more trailing sessions. S&P 500, the participation has become neutral, the breadth is mixed. Russell 2000, the participation is neutral, the breadth is mixed. So basically a lot of pressure is on Nasdaq, I would say. If you ask me which of the three is better, I would say it is Russell 2000, because the breadth is comparatively strong. The breadth in the S&P 500 is close to 40-42%, I would say, and I think in case of Russell it is around 55-56%, which is much better. So if at all you are looking for opportunities, the indices to look at is Russell 2000, I would say. Let's look at what the macro picture is suggesting. The US yields are rising again, which is a problem for equities. Dollar rising, again a problem for equities. VIX has been neutral, I would say. It is just below 18.5. It suggests that market is all okay. BTC is bearish, basically means the risk appetite for investors is not there in the market. Gold bearish, again defensive demand. So if you look at US yields, dollar, BTC, gold, these four parameters are basically suggesting that investors or traders are not willing to take much risk in the market, and that is the reason the equities are facing so much of downturn. So the indices, the participation, the breadth, and these four macro indicators at this point of time all are indicating equities to be negative. So play your bets accordingly. For me, India still remains weak because 50 EMA is an important parameter to cross. US remains neutral and macro remains uncertain for me. So the key takeaway would be India remains weak because it is still trading below 50 MA and the breadth is weak. US remains stronger than India, but participation and breadth are yet not convincing. Dollar strength and elevated yields continue to pressure risk assets. Bitcoin remains weak, suggesting risk appetite is subdued. VIX below 20 indicating no signs of panic. Hope you guys find this video useful. I would say don't go aggressive in the market. Only play the bets where you are very sure. Broader market is not very conclusive at the moment, so be little conservative. Play the bets where you are very sure. Keep looking at the breadths and the participation because those are very key indicators at this point of time. Thank you so much, guys. Have a good one.